Hello, and welcome. Yesterday, I ran a test using AI Trend Predictor and made three predictions for today's potential outcome. Okay, three predictions. Those predictions were, and you can watch yesterday's video, I'll put a link to it in the description as well. And those predictions were CL, the third hour, that it was going to be down is what the machine learning tool predicted here. And it has an accuracy score, which is a statistical library that I use to essentially score the predictions that the machine learning tool is making. It has a confidence score essentially of 65.62%. Then after that, I ran ES. ES had no predictions. As you can see, there was no minimum 60% threshold anywhere, which is my minimum criteria for picking a prediction that it makes. So ES had nothing. But the other index, the NASDAQ futures, did. And so at 11 o'clock for NASDAQ, it predicted up with an accuracy score of 64.52%. Remember, guys, these are two separate libraries in this Python software. Okay. And then finally, we had RTY, which is the Russell 2000 Futures Index. That one had two predictions, one for the second hour, hour 2, and then another one for hour 6. Both of those were down. Hour 2's confidence score, let's call it that, is 71.88%. On that score on hour 2. And then for the 6 o'clock hour, it's 62.50%. As I mentioned yesterday, we want to take the half hour of that. So whatever the hour is, you just take the first half. Okay? And so one way to find out is let's go and run it through to see what happened, how close we were, or what the outcome was in actual terms. So this is Thursday. This is now today. We are April 13th, 2023, Thursday. And again, the video you can tell was shot yesterday, and the results were predicted yesterday for today. So Wednesday is when these results were predicted. And so let's go in and set this up. So the first one we've got is, let's go ahead and go in order, I guess. So let's just do CL. And I'm going to go and quickly complete this. So CL, we had the prediction of the 3 o'clock hour until 3:30. Okay. And we predicted down. So that's what I'm going to pick. And then I'm not going to use modulate break even for this video. That has a very nice feature, obviously. And it is exactly what you think it is. And then for money management, 3,000 is a lot. We're doing a day trade, sort of a scalp here. And so I'm going to take this down to about 300. And for the net session loss limit, I'm going to take that down to 200. I'm going to leave this the same. Very nice feature here, consecutive loss switch. If I was using both long and short, it would switch back and forth. If I have two here, after it takes 2 consecutive losses, it switches. This is a very nice feature as well. But for this demonstration, I just wanted to demonstrate the accuracy of AI Trend Predictor's machine learning predictive capability. So we're going to focus on that on this video. And so I'm not going to use move stop, another cool feature. For the profit target, okay, this is CL, and we're running this at 3 o'clock. All the times that you saw essentially were Pacific Standard Time, okay, because I'm in Los Angeles. And so that time you have less volatility. And so if this was during RTH, regular trading hours, I wouldn't put $100 for CL because it's relatively volatile. It's not as volatile as NASDAQ, but it is volatile. And so I would not pick 10 ticks here. I'm going to leave it at 10. That's $100 worth of risk. Okay. And I'm going to say if I hit, I don't know, $300 or let's just say $400. Okay, I'm doing both, but we're only going for short, so this is not going to have any impact. This is short unrealized minimum peak profit. What that means is if we have unrealized profit of a minimum unrealized profit of $400 or more, it's going to start trailing the peak price. Okay, this is custom stop logic. And so this is particularly designed for those that are prop traders because prop trading firms require that the drawdown calculations are done off of the peak of whatever trade that you're in. Peak meaning if you're in a long trade, it's the highest high unrealized profit that you had. And if you're in a short trade, the lowest low unrealized profit. So whatever the lowest low price was, what was your unrealized profit in that trade, that's your peak price. And if it starts going back, even though, let's say you still book your profit, a small profit on let's say it had $1,000 unrealized profit, but you booked only $200 of that unrealized profit, well, that's an $800 drawdown against you in their threshold. A lot of people don't know that's how most prop trading firms work, but it is how they work. And so I designed trailing peak threshold to address that problem and to try to give you as much advantage as you can possibly have. And so what I'm saying here is if I have an unrealized profit of $400 or more, it's going to start trailing the peak price, the highest price, the largest unrealized profit that I have, 25% away from that unrealized profit. Okay, so it doesn't mean it's away from $400. No, if you were up $1,000, that's more than $400. So the stop for an $1,000 unrealized profit would be $750 in this setup here because it's 25% away from the peak high. Does that make sense? I hope it does. If it doesn't, let me know in the comments. I'll be happy to respond to that. Okay. So I'm going to leave that at 400. We have to make sure that we have slippage. So for CL, it's about 1 tick. For NQ, it's 2 ticks. For ES, I use 1 tick. For Bitcoin futures, I use 7 ticks. It all depends on the instrument. And to get a good idea of the back test, you need to definitely address the slippage as well. And just a quick reminder for these back tests, they are incredibly accurate. You may read different things on the internet. Just please believe me, guys. I'm an engineer. I'm a licensed professional. I can tell you that if you're doing your calculations on bar close, which is what AITP prop trader is doing, and you're using minute bars, not 1 minute bars, minute bars in general, whether they're 1, 5, 15, 30 minute bars, not custom bars, not Renko bars, not tick bars. If you're using minute bars that are being calculated on the close of the bar, then the data that it's using is OHLC data, which is open, high, low, and close data. That makes it incredibly accurate. So your back test will be accurate in this system, okay, in AITP prop trader. Most systems are using tick bars, okay, and a lot of them, when you use a tick bar, the back test looks fantastic, all right, or you're using a custom bar or a Renko bar or a Heiken Ashi bar. Those types of bars, the back test will look fantastic, all right, but in reality, it totally fails, all right. But if you're using minute bars and you're calculating on the bar's close, then all of the data that every data broker has is what? 4 pieces of information when it comes to price, right? Assuming you're not counting volume, the information that they have for price is open, high, low, and close. Make sense? And that's the information that we're going off of. So it's completely accurate. All right. So this is Thursday. That's today. We said down between 3 and 3:30 for CL. And I have the trailing peak threshold set up. And I'm going to go ahead and run this and let's see what happens. Okay. Oh, by the way, I left this at 2 consecutive loss switches, but it's not going to count here because we're not switching. It's not switching directions. It's only looking for short trades. And I'll do a demonstration in this video with switch as well, with both directions chosen, because that's a cool feature. Very helpful. And so let's go and run this and see what happens. Okay, so it looks like we had 2 trades. All right, this is very sensitive, guys, as far as the entry goes. I've said this in another video as well. Here are the 2. Let's talk about the trades really quickly first. So on the first trade, we said between 3 and 4 o'clock, or the 3rd hour. It didn't say between 3 and 4. So it's the 3rd hour. It's expecting price to be down. As you can see, it started to come down even earlier than that. And there it is, 3 o'clock, right at 3 o'clock actually. It started to come down right at 3. That is exactly 3. Okay, right there, 3. But the trade didn't enter until here. Now, the trade entry has only one very simple condition other than it's looking for extremes. So that's what I was going to say. The entry conditions for AITP prop trader are purposely, deliberately designed to be very, very loose, okay? It is looking for short trades. It's looking for a red bar followed by a green bar. That's the only criteria, okay? For long trades, it's looking for a green bar followed by a red bar. That's it. Other than that, There is an extreme check. It's checking RSIs to see if it's on the extreme edges. Then it skips those. But other than that, there's nothing else. Now, I did that for a reason, because this is supposed to be based off of the prediction that AI Trend Predictor is making. And so that is your strategy, okay? You're giving yourself a statistical edge using AI Trend Predictor. Remember, if you're, for example, doing any type of wagering in Vegas, and somebody told you that you have not a 62 or 60% or 70% odds or statistical edge. No, if you had 51%, 1% edge over the house, the idea there is you would use some sort of like Kelly criterion on your betting size, and you would continue to bet, because no matter what, if you have the right system, you have an edge, a 51% chance of winning. And ultimately, you're going to win. The math is in your favor. Ultimately, you're going to be up. Now, I'm looking for a minimum of 60% accuracy on this score, okay? And so when the machine learning tool that's being trained on the data that we're feeding it, and I have yesterday's video and the previous video explaining how I grab the data using Data Grabber and feed it into AI Trend Predictor, and I have AI Trend Predictor get trained on that data. Essentially, that's what's happening in the background, and then it gives you the results of its predictions. And then I have a second library in there, a statistical model that is measuring to see how accurate those are based on past historical assumptions that are essentially in line with that prediction. And so it is a very accurate way of doing things, okay? So as far as this, it didn't enter here because you'll notice that right at 3 there is no, it's looking for a red bar followed by a green bar. It's going to enter on the green bar. There was none, okay? It got it here, red bar, green bar. It entered here. Price went against, took a $100 loss right there, okay? Because we have 10 ticks of risk, all right? That's your risk per trade. That's your admission fee. Think of it that way, okay? That's the stop price. But the next one hit it, okay? And so the next one right there is, notice the prediction was the third hour is going to be down. Was that correct? Was it down? I hope this is starting to make sense, guys, and you see how valuable this is. And by 4 o'clock, it had already started to pick up again. It went back up a little bit, but we stayed with the trade. Why? Because we have the trail right there. It's trailing the peak price, and so it's right there, and it took it right there. So that is where it is. We basically put it 25% away from the highest unrealized profit this trade would have had from the entry point, and it was right there. Okay, that was the highest point, and that's where your stop was. When price started to move against you already, you had already booked your profit, and including that one loss, you're up 230. Okay, that's for CL. Let's do the next one. That was NQ. So let's just go in order with the same prediction model that we had. So Thursday, for NQ, we said 11 o'clock till 11:30 because it was for the 11 o'clock hour. It predicted up. So I'm going to pick up there, okay, or long. Up. And then let's go ahead and do the same. See, we're going for a scalp. This is a day trade. If I was doing anything where I was holding for longer periods or overnight trades, then I would do higher amounts on the money management. But when you're doing scalping, you want to get in, get your money, and get out. Okay, it's all about base hits. Okay, especially if you're doing prop trading, it's about base hits. Home runs should happen once in a blue moon. Okay, if you're getting too many home runs, something's wrong there. Okay, it shouldn't happen. So base hits is what you're after. And so let's see. We are now in NQ, more volatile. In fact, the most volatile from the indexes is NQ. And the slippage is higher on this guy, so we have to do 2 ticks for this. So for NQ, I'm going to have to take a little bit more risk. But number one, we're in RTH. If we were not in RTH, I would probably still reduce my risk to about $100 to $150 for NQ, somewhere around there. But we are in RTH hours, so I'm going to give it a little bit more for NQ. I'll stick with 150, okay, for NQ. So let's do 150 is 30 ticks, $5 a tick for NQ. For CL, it's $10 a tick. It's that's $10 a tick for NQ. It's $5 for RTY. It's $5, okay. So that's $150. I'm going to leave this as $100 because that would be a $500 win. That's over a 3x, so that's good. And let's do the same thing as we did for CL. Let's grab, if we can get to the threshold of 400. Again, we're only doing long trades, so this is not going to be affected. This is short unrealized minimum peak profit. This is the only thing that matters, but just so that it doesn't confuse anybody, I'm doing both. And so let's go and pick NQ. And let's see how it did. All right, we have 2 ticks of slippage. We have everything set up. Let's do it. NQ. All right, looks like one trade, and that looks like a profit target because it's $500. So that's a profit target. Yeah, there it is. So that went straight in our favor. We said 11 o'clock. The AI trend predictor predicted that it's going to be higher. There it is. This is 11 o'clock. Okay, and it just hit the profit target all the way. And it actually had more room there. So it had like at least 2.5, 3 points right there. Yeah, what 13.25 to, well, almost 5 points, almost 5 more handles there. Okay, so there was room still, but it took it at that price. All right, let's do the next one. So far, AI Trend Predictor is doing great. So far, it's 2 out of 3 are correct. Let's go for the third one. Let us do, and just as a reminder, that is AI Trend Predictor, and these results are the same exact results that you will see in the video that I'll link into this description. That video was posted yesterday, was shot yesterday, and you can see everything in that video. Okay, so you can actually verify everything that I'm saying, because let's assume you don't believe anything I'm saying, but with verification, I hope you do. It's always a smart idea, by the way, to trust but verify, right? Like Ronald Reagan said. Makes sense. Okay, let's go and do the final one, which is RTY. So let's go ahead and set RTY up, the Russell 2000 futures, the E-mini. Let's go and set that guy up. For slippage, I'm going to go with 1 tick. And for the stop, I'm going to go with $150 worth of stop on this one. We might have gotten away with a little bit of a lesser amount if it was just 2 o'clock in the morning. But usually for the indexes, 100, 150, 200. For NQ, sometimes 250, even 300. It all depends on what you're seeing the day before. So, it takes a little bit of gauging. Just look at it from the day before so you can figure out the range, if it's a tight range versus if it's a wide range, etc. So we're looking for down, and AI Trend Predictor predicted that it's down. Just as a refresher again, let's take a look at RTY on AI Trend Predictor. So let's go down to, that was NQ, and let's go down a little bit more, and we had RTY right there. Okay, it was 71% hour 2 and down, and then hour 6 down again, and that's a confidence score of 62.50. Incidentally, yesterday we also ran YM, but I did not choose anything in YM because, and this is going to happen when you run it through, whether you're running 5 instruments, 10 instruments, whatever it is that you're checking, you'll notice that you don't hit that minimum 60% threshold. Okay, and so this did not hit it, as you can see, at all. And again, as I mentioned in the past 2 videos, we ignore the accuracy score. The prediction is still accurate. It is making a prediction at hour 0 of it being down, but the accuracy score, the way the math works on that one, I'm ignoring it completely. So this is, I just ignore the midnight hour completely. Okay, it is a volatile hour. A lot of various funds set things up sometimes exactly at their midnight if they're in Pacific Standard Time. And so it is a pretty volatile hour. I tend to ignore that hour. Okay, look for the other ones. Things sort of calm down after that hour. So anyway, let's go ahead and pick but continue the setup. So again, the strategy here is to go off of the direction that the AI Trend Predictor is making. We're going off of that, and we're giving ourselves as much of a statistical edge as we possibly can. Okay, obviously nobody can tell the future with any certainty. That's why you have the accuracy scores printed right there for you. And when I say printed, it's not just on the terminal itself, but it is also in the output.txt file, which is in the AI Trend Predictor, this folder right here. Trend Predictor by Pinnacle Quant. That's going to be the output.txt file is going to be written to that directory automatically. Okay, so let's go ahead and complete this. For the risk, I'm going to say, like I said, 30 ticks. That's over the 3x, so I'll leave that the same. On the unrealized profit, let's 300, 350, 300. All right, that's 2x. And so, all right, so that is the setup. Let's make sure we have slippage. We do. And let's make sure the dates are correct. That is not, we're looking for Thursday only because that's the prediction. It was made yesterday for today. All right. Do we have everything set up? Yes, we do. Oh, no, we don't. So we want to be 300 and 200 again. This is a day trade. I don't want to let this go. Let's say, we booked $300. I don't want it to go past that. Every day you have to sort of know where your limits are for each instrument that you're running. Okay, if you get greedy, there are sayings when it comes to this. Okay, you don't want to get greedy. All right, because if you do, chances are you're going to give it back. Okay, base hits. That's what you're after when you're a prop trader, in my view, in my opinion. Let's go and run this. All right, 355, 3 trades. Let's see what happened. The important thing is, was the prediction correct or not correct? Okay, we'll get to 6 o'clock. All right, so I want to show you what happened. At 2 o'clock, it said the 2 o'clock hour with over 71% accuracy, it said it's going to be down. Actually, initially it went up. Okay? Then it went down. So it did go up initially. Before that hour finished, it had already gone back down again. Okay? Or it got pretty close to finishing, I should say. It had technically maybe even finished pretty close. So it looks like by 28, 27, something like that, it had already, in fact, let's find out exactly where. 26. So 326, it was already done. All right, that down move is done, I should say. And so the first one took a loss. There was a little bit of room here, granted, okay, but it took a loss. And so we lost $150 right there. The next trade that went in was the winner. Okay, that's why you have to set this up right. Okay, you have to give yourself at the very, very least a 1-to-1. Okay, which is okay, 1-to-1 or around 1-to-1, that's fine. But generally speaking, you want to be at 2x, 3x on your R. Okay, and so you want to be careful with that. So you have to have like a systematic way of doing things. All right, so, let's do the 6 o'clock. That's what I wanted to show you too. 6 o'clock was down all the way until right there, 6:37, open, RTH open. You're going to get some volatility that picked up. And so this is, again, all Pacific Standard Time, okay, guys? So it went down. That's also a winning trade, and that was it. So all of these, you'll notice stop loss, yet you're winning. Again, we just moved the stop. Okay, so the stop was above the entry price, 30 ticks above the entry price. We move it down to 25% away from the peak price. Okay, that was the peak. It's 25% away. All right. Okay, and finally, I wanted to demonstrate one other thing that I mentioned in this video. Actually, I'll do two things. The first thing that I'll do is let's just go with the modulate break even. So imagine if instead of, so this was the result that we received. Imagine if we had used modulate break even here, okay, and we had something like 5 ticks of profit, then move it to break even plus 2. Okay, that's incredibly tight. But if you want it to be tight, let's see what happens. Okay. First of all, let's take it. Okay, those are the results. But before we get back to the results again, let's take a look to see what happened. So that's the tiny little move that it booked. The next one was a loss, but then it caught that big run down. Okay, it caught that one. And then at 6 o'clock, that's what happened. And that's what happened. So That one is this stop right here. This little one is off the break even. So what the custom logic, stop logic here is doing is it's saying, I want to be protected against that trade. Okay, 5 ticks. This is very tight, guys, but if you wanted to run it that way, if you were scared of giving anything back, okay, then this is one potential way of doing it. So it would be, you're going to say, if I have essentially 5 ticks of profit, then move it to break even +2. Okay, not much money to be made there at 2 ticks, even if you're up, but at least you're not giving anything back. So it all depends on how you're doing the math, what system you're using. Okay, I mentioned the Kelly criterion earlier. What system are you using, all right, to place your bets, if you will? And so that's what would have happened. Okay, versus without it. Let's do it again. So we have 455 with it. Okay, 5 trades, 4 wins, 1 loss. And then that is without the break even. You have 3 wins, 2 less trades, and those are your hypothetical results. Now, there is another way of doing this. So you can say, well, Rafi, I'm seeing this other directional thing here. Can we hedge? Can we sort of hedge our bets a little bit? Not in technical terms, you're not hedging. What you're doing is you're going the opposite way. Okay, and I briefly talked about not modulate, break even, the consecutive loss switch. Okay, so this is saying if you have 2, if you leave it at 2, you can put 1, you can put 3, but if you leave it at 2 in this case, it means that if you have 2 consecutive losses in any direction, it switches to the other direction if it's enabled. Okay, if it's enabled. So I'm going to go ahead and enable it. Okay, and I'm going to now reduce my stop. I'm not going to use modulate break even. I'm showing you a different way of doing things. Okay, the risk here was 30 ticks. That means I paid $150 for the price of admission. Let's just look at it that way, because if that trade goes against me, I'm down 150 right off the bat plus slippage. Okay, and by the way, I have accounted for slippage of 1 tick here. So let's say that I reduce this and say, you know what? I'm going to pay $50 for the risk for my stop. That means I have to also reduce my unrealized minimum peak profits as well. Okay, that's 50. I'm going to 3x it. It's 150. All right. So I'm going to leave the profit target unchanged. That's 10x. That's huge. Okay. But I'm just going to leave it unchanged just so I can demonstrate to you what's going to happen. All right. So remember, now we're looking for both directions. This is not a hedge. What it is I was wrong the first time. If the opportunity comes to take the opposite direction, so if I was wrong on the short, what if the next one, the long, is the winner? Okay. So you select both of them and let's see what happens. All right, did I just pass it? Yes, I did. All right, so that initial trade is the same losing trade. The first one was the losing trade. It reversed itself because I also checked go long AI prediction. It reversed itself. It then went short again because it's still, the opportunity is there between 2 and 230. See, this thing is very aggressive, guys. That's why you have to be tight. If I put this at 1230 as opposed to 230, I mean, this thing's going to take, I don't know, 20. Well, actually, it's going to take as many trades as I allow it to trade. If I say maximum number of trades is 10 here, so it's going to take 10 full trades, most likely. In fact, if I put this at 20, it might take 20 trades, okay? It's going to be very aggressive. It's going to keep looking for trades. That's why you want to limit it. With this, ideally what this means is, even if you were to take 10 trades, if all of them were losers, you'd be down $500. And what are the odds that they're all losers, okay? It's pretty low. It's possible, but it's pretty low. 1 or 2 of them should be winners. And hopefully, if you've set it up right, remember the Kelly criterion, if you've set it up right, if you have some sort of a system here as to how you place your bets, then you would have given yourself a statistical edge that way as well with the R ratio, the risk to reward ratio. Okay. And so these, now I just demonstrated to you stuff with AI Trend Predictor, and now I just demonstrated AI TP Prop Trader as to the different acrobatics that you can do with this trade management system. Okay. One last thing that I'll add. Again, the logic, the entry logic, the defense logic on this thing is very good. Okay, because it's got a very custom, beautiful, custom logic setup where it's literally a perfect glove fit for anybody who's a prop trader, okay? But if you wanted to have your own strategy, for example, your own entry conditions added to this as well, I can certainly do that, okay? That would be custom development, and I would essentially write in your rules into AITP prop trader and give those to you. For example, you can say I would only take the short entry if, for example, we have a situation like this, okay, where the bar of zero, close of bar 0 is higher than at least, let's say, the 4 or 5 bars to the left of it. Okay, so on your left side of the chart, your price is higher. So this price has to be higher than everybody else. Then take the short trade. I can write that rule in for you if that's what you want. Whatever rule that you have, if you want to customize AITP prop trader, that would be a separate custom development contract that you would have with me, and I can develop that for you and get you your own custom version of AITP prop trader. I can customize that for anybody. Okay? I hope this video has been helpful. If you have any questions, please put it in the comments. If you feel this has been helpful, please share it with others. Give me a thumbs up if you liked it, only if you liked it. Until next time, take care and God bless.